Hey,
Hey, Paul. Happy Good Friday to you.
yes. Happy Good Friday to you as well. It's yeah, it definitely feels like spring.
Oh, yeah.
Easter weekend, the weather's warm, and baseball has started.
Yes. The crack of the bat.
So far, my prediction of the Angels going 162 and 0 this season is holding true.
Yeah.
So far, I'm a genius in that prediction.
I hope you have some money down in Vegas on that.
uh, Hope springs eternal, I guess.
Yeah, it's always fun for like the first month or two till your team is way out of it, and then
Yeah. Yeah, I mean, the Angels, they've definitely got a shot at it, and I think the AL West is doable.
hmm I love that everybody is still going to start plunking the Astros, I think, still. I,
That should go on for a long time, I think.
I think that everybody kind of thought, oh, well, maybe there was no fans that would just kind of die down, but nope. The guy got hit yesterday.
Yeah,
Correa got hit, I heard.
yeah, yeah. So, yeah, we're going to the game tonight. It should be fun. I watched a game last night. It was, the first sporting event I've watched in a long time where there were significant fans in the stands. You could actually hear them, not just the recorded, fan noise or the music.
Mm-hmm.
And I think I heard that yesterday, the day before yesterday is when Orange County went into the orange tier, and they could, I think, be 50% capacity. And the Angels right away opened up a bunch of extra tickets so people could basically show up and get tickets and go to that
Yeah.
game yesterday.
Well, we have tickets for tomorrow, and yeah, I'm kind of bummed because I think I paid like all this money for tickets for there to be 10,000 people, and now they're
Yeah,
selling for like a quarter of the cost.
yeah,
So,
yeah.
oh well.
So, anyways, I guess good to connect. It's been a couple weeks. I think we've been working really hard, but it's good to connect on some stuff, just to make sure we're both on the same page on some stuff, and make sure we're getting some information out to our clients. I think a couple of things to touch base on. I feel like we talk about this all the time, but it's just so important to our clients. Everything's hanging in the balance. So the first is just kind of filing deadlines, and especially as it relates to, this is April 2nd. So estimated tax payments are coming up on April 15th.
Yeah. Yeah. So I guess to summarize, your first quarter 2021 estimate is due by April 15th, even though your extension payment for 2020 isn't due until May 17th.
Right. Right. So I guess the first thing to, what we're talking through as a firm is everybody talking with our clients, and if we don't have their information because they're waiting on the May 17th deadline, then talking to our clients about, hey, do you want to pay in at least based on your 2019 taxes?
Right.
Assume things will be the same and get that payment in. We've also talked about, could you send in an extension payment at May 17th and have that overpayment applied back to the April 15th payment? And I think that's probably doable. And even if the IRS were to say it's not, the underpayment penalties would be very insignificant. But the other thing to say is, I do think there's a significant move to have them move that April 15th payment date to May 17th. I don't know if it's going to happen because I think the IRS has to basically reprogram all their computer systems and everything. But I do think that there's a move to push that back.
Yeah, I think we saw an article yesterday. Was it 60 members of Congress that were urging the IRS to move that estimate date to May 17th? And it just kind of logically makes sense, because how are you supposed to, in theory, kind of calculate your estimates for 2021 if you don't necessarily know what your prior year taxes are? I mean, at least it makes it more challenging. You're kind of doing a moving target there a little bit.
Right.
Yeah, and it's funny that, so I was talking to a couple of clients, and 2020 was such obviously a weird year with all the unemployment, and people's income was so far down that if you're going to base your estimate on pay your estimate for 2021, it does feel like you need to go back to 19, because that probably is a little more standard of what your income flow is going to be, I guess.
Yeah. Yeah. So that's probably enough to avoid significant penalties, but you have no way of knowing for sure that you're quote unquote penalty proof.
Right. There's no way to know at this point unless you've already filed 2020.
Right. So this is the year to be as close as possible and potentially not penalty proof.
Yeah.
You mentioned unemployment in there. That's another thing that's new. I think we've talked about the fact that, maybe 4 weeks ago, the Biden rescue plan, I think it's called, said that there's a portion of unemployment that's not taxable, but people have filed tax returns already. I had.
Yeah.
And the IRS has announced that people don't need to do anything. They don't need to file amendments, that the IRS is just going to figure that out and send the money back for people on that amount.
Yeah. So you don't need to amend your return. I guess my caution would always be, I'm sure the IRS is going to calculate things to the best of your benefit, of course. And I'm joking. So, I think that I would urge the clients to let us know so we can plug that into our software just to kind of make sure that they got the right amount.
This brings up a funny a topic Tootie and I were talking about last weekend. This is what my wife and I discuss when we're on a little weekend getaway, is tax filings. But, it seems like we are so close to the IRS being able to just file tax returns on behalf of taxpayers.
Yeah.
I think when they increased the standard deduction so significantly, maybe 3 years ago, it took a lot of people out of itemized deductions, and they could frankly do that again with mortgage interest being limited and the state tax deduction being limited. The only people who would be over, let's say, 35,000 in standard deduction would be people who are making really large charitable contributions.
Yeah. And on the mortgage interest, I mean, the IRS gets the 1098, I'm assuming, so they could already track that.
You could just eliminate itemized deductions at this point for the vast majority of taxpayers by increasing the standard deduction to, $40,000, let's say. Then you don't even have to deal with all that stuff.
I mean,
but it seems like, think about the savings in manpower and agony and all this stuff. If the IRS, by February 15th of every year sent you a report that said, here's your stuff. If you do nothing, we're going to file this return for you and you can expect this refund, or you're going to owe us this money. Otherwise, if you want to file a return because you have high charitable contributions or you have a business or something like that, then you need to have that filed by April 15th. It seems like that would make the administration of the tax system, even on their end, like significantly easier.
Yeah. What percentage of people would fall into that? I mean, it's essentially W-2 wage earners and, 1099s. I mean, it's not people with partnership returns and K-1s that flow in, but that's got to be like 70% probably.
Yeah. I mean, clearly you and I are just speculating, but yeah, I would think so.
Yeah. I mean, I think the only caveat I would say to that is, like for California, the itemized deduction, the standard deduction is still really low. So I do have like a pretty significant amount of clients where we take the standard deduction for federal, but then we have to itemize for California.
That's true, but I think if the feds did it, then the states would have to look at it and go, okay, well, we can save X billions of dollars in our administration of the revenue system in exchange for allowing this much higher standard deduction.
Yeah.
That seems like a pretty good trade-off.
It is such a bummer that IRS is not technologically more advanced. I mean, it would save us so much more time if like maybe we could log in and if like I check my transcripts online. I check to make sure my estimated taxes all through like irs.gov. And if we could do that for our clients, oh man, there would be a lot of things that we could do that would streamline the process.
And even if you go through that irs.gov, it's still really complicated and hard. The California one, the MyFTB, is significantly easier to get around in and get information.
Yeah.
Anyways, it was just a thought I was having. I mean, we just spend a lot, America and people spend a lot of effort on tax compliance.
Yep.
Which is great. I'm not making a kind of commentary on the incentives that are built into our tax system. So that's the problem, is if you start just making everything the same, then you don't incentivize people to give to charities and things like that, which I think do a lot of good. I think that the tax system encourages home ownership, charitable giving, things like that. I think you still allow for that, but for those who don't, if you have a generous enough standard deduction, it makes it so you could eliminate the burden of tax compliance on, middle America.
Yeah. No, I think it's
Anyway.
good.
So I forget how we got to that. We were talking about unemployment and
how they were automatically
because we
assessing.
were talking about the IRS giving you
Money back.
The unemployment refund on their own. That was it.
Yep, exactly.
So I think the other things, the PPP loan deadline was extended.
Yep. To May 31st.
Yeah, I think that's important that people know that they've got till the end of May now to apply for PPP loans. And I am finding clients that I'm preparing returns for that I look at and I go, oh, this person's entitled to a PPP loan, and they hadn't done it yet. So I think it's great that there's that additional time.
Mm-hmm. Yeah, and I think it's worth still mentioning that, we're still on hold, waiting for California to determine what they're going to do as far as PPP loan forgiveness and whether we can deduct the wages related to that. It sounds like, that American Rescue Plan that was passed really threw a kink into, it sounded like California was ready to come out and say, hey, you can deduct up to $150,000. And then there was provisions in the American Rescue Plan that caused them to pause and make sure that the state was getting the proper amount of funding and that it didn't adjust that. And now we're back to waiting until there's some clarity on that.
Yep.
So that's correct. And then it sounds like you had looked into the new Biden tax policy plan as well.
Yeah, I mean, I just read some highlights. This came out yesterday, I think. So, I mean, it's really new. But this is the Biden administration is proposing an infrastructure bill. So, significant government expenditures on highways and things like that. One of the things I know that is part of this is Amtrak from LA to Vegas.
Well, I mean, we could do that one right after we finish the LA to San Francisco line.
You mean the LA to Fresno?
Oh,
This one makes some sense. I think that this thing will sell out. It'll probably be the one profitable Amtrak route, in the country other than on the East Coast. But yeah, so this would fund $2 trillion in infrastructure spending, and it would come from an increase in the corporate tax rate from 21% to 28%, and imposing higher taxes on multinational companies. I don't know what that means. Higher taxes on multinational companies. That sounds, who knows what that means. But the bottom line is he has said that that he believes there'll be enough revenue just from this corporate tax increase to cover this, but that he's willing to negotiate on an individual tax increase as long as it wasn't an increase on individuals with income under $400,000. So that's consistent with what you and I have been talking about from his plan when he was running.
Right.
And then after he was elected. So
I think that 28% rate, I mean, that's essentially, it's almost like a return back to pre-Tax Cuts and Jobs Act, where we had a graduated rate, but it basically, I think, went at 75,000, it was up to 25% maybe, and then above 100,000, you were like at 30+%. So it's essentially returned to that, I would say.
yeah, and I wonder if it would be returned to graduated or if it's just 28% on your first dollar of income.
Yeah.
No, you're right. It does go back, but I wonder if then they will pull back on the QBI deduction that's available to flow through entities, because that QBI deduction was intended to give flow through taxpayers the same benefit as that corporate tax reduction.
I mean, I gotta think that QBI, I keep planning on the fact that that thing is going to be gone in any time. So
yeah, it's interesting.
I mean, I guess, and that I had this question for you maybe earlier too, which is, would they make these changes retroactive back to the beginning of the year, or, would they start afresh, starting in 2022? I mean, we're like a quarter of the way or more than we're just a quarter of the way through the year right now.
Yeah, I could see them making it effective for 2021 on corporate, but not individuals.
Not on individuals?
Yeah.
Just because they're more like, they don't really care about corporate America as opposed to the individual taxpayer.
Yeah. Yeah. And it's not personal. You're not taking money away from families per se.
Mm-hmm.
It's just a planning thing for an entity.
Yeah. So if you had income to be recognized, you to do some planning, you sell your business or whatever, you may want to put it into this year and definitely not wait till next year.
Yeah. I mean, yeah, that's true.
If you thought that the capital gains rates were going up or individual rates were going up.
Yeah. Yeah. The other interesting thing is I saw a story that about the IRS being so far behind, and we know we're experiencing this. Although I had a really good experience today getting through to them pretty quickly.
Mm-hmm.
By the way, they've instituted a callback. I don't know if you've noticed this. The state of California has had this for a while, where you call. They say your estimated wait time is 45 minutes. Press 1 if you want us to just give you a call back when it's your turn.
Right.
The IRS has that now. I think that's new to me. I don't know if you've noticed that, but that was helpful.
They usually just hang up on me. So
that's
the way they get me to call back then.
Press 1 if you want us to call you back. Press 2 if you want us to call you a hang up so you can call us back.
Yeah. Yes.
But they've processed 28% fewer tax returns through March 12th this year as compared to last year.
That's a huge amount.
They're significantly delayed, which is causing refund delays, which is causing all kinds of problems. So,
yeah. Have you heard about? You said refund delays. I mean, before if you direct deposited, you would get your refund in like 3 weeks. Have you heard any timeline or heard any anecdotal evidence of people how long it's taken to get their refunds?
I have not. I think on a standard return, that's probably automated, so that's probably still happening pretty quickly.
Okay.
They issue a table every year, and it's generally about 10 days for those things. Yeah. And I have not heard anybody saying anything about it. Anyways, I think that covers everything.
Yeah.
It's going to be, it's April 2nd. It's going to be an interesting couple of weeks while we wait for figure out what our clients want to do related to California and what our clients want to do related to that estimated tax payment. I mean, if next week, California releases a law on PPP and, the feds delay the payment deadline for that first quarter payment, I mean, it's going to change
Yeah.
everything,
Yeah, for sure. Definitely.
Yeah.
I think the last thing I think it's worth mentioning too, they did move the deadline for individuals, but C Corps are still due on April 15th. And then your trust returns are still due on April 15th as well. You can extend both of those, but those due dates did not change.
Right. That's important to mention. All right.
All right. Well, have a good time at the game.
Yeah, I will. You too. And I'm sure I'll see you tomorrow working, but have a good weekend and happy Easter.
Happy Easter to you.